Excel accounting practice problem. Enter billable expenses to an invoice transaction. Get ready because we're about to excel. Here we are in our Excel worksheet. In prior presentations, we put together the worksheet from a blank sheet, now entering transactions into it. If you have access to it, there's two tabs on down below, example tab and the practice tab starting out where we left off last time, the example tab in essence being an answer key. Let's take a look at it now. In prior presentations, we considered entering a timesheet, having a billable type of timesheet that we're going to continue on here. We also want to think about the idea of having expenses that we would like to basically pull over and charge or include in some way, shape, or form into the invoice as part of what we're charging on the invoice. And we can imagine if you're using a system, an accounting system like a QuickBooks or other accounting software, how they can try to tie those two things together by having basically billable expenses, sometimes they might be called, meaning when you enter an expense into a check form or a bill form, for example, you can tag it to a particular customer, then pull that information over into an invoice, including it as an invoice item, possibly marking it up so that you can use that information to tag and help you to do the invoicing process. So we won't be able to tie them out the same way, but we want to keep that in mind, meaning we don't have the automatic tie between the two forms when we're entering this in an Excel worksheet, but we can imagine how that would work out in, say, a database type of program. We can also think about some of the problems with it as well. One of the problems being that if you use an expense and just charge it to an expense account and you don't use an item, then what's going to happen when we add it to the billable item is it's going to create a negative expense account. So we'll see what that does. That's not typically ideal because usually the invoice item, you would like to include it as an income type of line item, not a negative expense line item, even though it has the same impact on the bottom line. So then you can do a workaround within most accounting systems to use items, which can take a little bit more work, but it's probably the better way to go. So let's think about that by going back to the practice tab. We're going to do some cleaning up first. So I'm going to hide some cells going from the skinny column all the way to the left because everything is unhidden at this time. I'm going to hide those cells. We're going to copy the ending balances on the right-hand side, selecting them, Control C, copying them. I'm going to paste them back on over here and paste them 1, 2, 3. Delete the cells in the middle so that we can see our activity right then and there. We also need to add some more cells so we have room to enter our transactions. So I'm going to put my cursor on column Z, go on over to AC, Control C, and then put that in the skinny, right click and insert copied cells. I need another skinny column here, so I'm going to copy this skinny column, copy that. I'm going to put that right here and insert it, not paste it, but insert the copied cells. Then I can hide the cells on the right-hand side, on the left-hand side, I should say, from the skinny right here on over to Z. Right-click, hide those two. I want to format these cells so that they don't have any indentations, and we're just going to paint that blue and formatting down, selecting those 4 cells, clipboard, just going to paintbrush that down so we got that nice blue formatted area. Let's go all the way down to the bottom of the trial balance here, down to there, and delete. So there we have a nice clean slate to work with. Now in a prior presentation, you'll recall that we had our billable hours all the way to the right, and so we still want to go all the way over here, and we're going to be billing out just like we did last time for the second client that we had these billable hours for, that being Smith. We're going to add those billable hours to an invoice. But before we do, we're also going to think about a billable type of expense. This is something that you might see in a job cost type of system, or if you're making something, if you're doing a job for someone, whether it be service-based, whether it be like a bookkeeping job or something like that. If you're making something, then you might be able to just say, these are expenses that I'm trying to pull over and pull them over into the invoice. So one way you could do that is tag the bills, the expenses that you're using, to a particular client, and then use them as line items on the invoice, possibly marking them up to then get your profit margin on it, or else you could take the whole invoice and mark it up at the end or something like that. So I'm going to go all the way to the left. Let's think about how that might work. So for example, let's enter something for, say we have an expense that we're going to be having a bill for that is going to be going to the office supplies, or we're going to write a check for office supplies. So we're going to pay for office supplies that we're going to use specifically for a particular type of job. So in our case, we might be buying like guitar strings or something in our in our shop here that we're going to apply to a job. So the cash would go down. We're going to say checking account's going to go down. We're going to say it's for 130. And the other side, typically we put this, we're going to say to office supplies, just to pick a generic expense. So we're going to pick office supplies down here, imagining in our office they're guitar strings or something that we're going to use for a job for a particular client. I'm going to go to the alignment and indent. So now, if this was a check in the system of like a QuickBooks, we could, as we enter this form, assign it to a particular customer so that when we then go in and enter the invoice, it might give us then like a pop-up that would say, hey, look, you've got billable time for this particular client. So I'm going to say that particular client's the same one that we have the billable time and now this billable expense that's going to be in place. The problem is that if you just assign an expense account and you don't use an item within a QuickBooks system, it doesn't know the revenue account to hit with it. What's going to happen is as you charge the invoice, it's going to reverse the expense out. That's going to be our issue. Let's go ahead and first post this out. I'm getting ahead of myself here. To the office supplies. So we're going to go down to the office supplies, and I've got this backwards, don't I? This should be 130 and negative 130. So now let's do it. So we're going to go down to the office supplies down here. We're going to be in AL22 equals, scrolling back up, picking up that 130. The checking account then is going to be here. That's going to be in AL4. This equals the 130 on the checking, decrease in the checking account. The other side, increase in the expense, decreasing net income. That's typical for an expense type of payment for a check. Let's imagine that we're going to be charging this particular client now on 130. We're going to have accounts receivable is going to go up, and we have two billable things taking place. One is going to be going to the service revenue that we have down here for the time that we put into our timesheet last time. I'm going to calculate this and pull this from our timesheet that we put together. Negative, I'm going to go all the way to the right to pick up this 8 hours so you can see where it comes from. You don't really have to do it this way, but gives you that added level of detail all the way over here to Mr. Smith or Smith Guitars, this 8 hours, and we're multiplying it times that $100 rate. So then that's going to give us then the $800. And then you would think this other item should also be going to some kind of service revenue and possibly be another line item on the income statement. But because we didn't use an item, and this is a problem in like a QuickBooks system, it will typically net it out against the expense. So what it's going to do is have a negative expense, basically negating the expense we had before, being negating that 130. It's going to have the same impact on net income, but usually we don't want to see it that way. We'd usually want to see that we used those supplies, even if we bought it directly to put into some thing that we're given to the client. We'd usually have it increase, the revenue account on the invoice and then have the expense net out to get to the net income. So if I then say this is the negative sum, the receivable is then going to be the 930. So I'm going to then indent these, alignment and indent. So again, this is what I would think of as the not so good way of doing it, but the way that often you'll see done in like a QuickBooks system when they're using these kind of billable items. So we're then going to post this out and see what this does. This increases the accounts receivable, of course. Then the revenue is going to go up for the amount that we charged for the billable time, which makes sense. The part that doesn't make sense, that's by the 800, is that this 130 is going to net out. Usually we don't have expense accounts go down, right? That's not usually what happens. So in this case, F2 plus F2, that's like a reimbursement on the expense account that we have here. So it goes back down and nets out to 0. It's the same impact on the net income as if it was included in revenue here, but you don't get to see the detail because the expense went up and then we netted out the expense instead of recording revenue and expense. We just netted out the expense for that 130. Now, the other way that we kind of like to, what you'd like to see happen And this is possible to do in accounting software as well, like a QuickBooks, but you have to take a step further to make an item out of the thing that you're billing so that it will pull into the invoice and know that it should be reported to an income account, because the items are what allow you to assign an income account, as opposed to not having an item where it's just going to assign it to the account that you said it was billable to, which is going to be an expense account, which isn't really what you want oftentimes or usually. So let's say this is on 130, and let's say that we had another expense for office supplies, same kind of concept. Office supplies down here is going to be for the office supplies, the other side going to the checking account. And let's imagine this was for the amount of $200. There's our debit and credit. We're going to credit the checking account. Let's post this out. Office supplies is going to be on down below. So we're going to be in office supplies. I'm going to do this with the keyboard, F2 plus F2. Scrolling back over. So now we've increased office supplies by the 200 again. Going up to the checking account, we're going to say F2 plus F2 and pick up that $200. And again, we're imagining that we assigned this to a particular client. So what we would like to do now is when we invoice the client, this is the journal entry for the invoice on 130, we would like to have set this up with an item instead of just using an expense account, so that then when I invoice the client, it will do the proper invoicing, which would be a journal entry, which would increase the accounts receivable, and the other side should go to service revenue. Service revenue. Now, in journal entries, you don't really see how these two things are tied together as they can be. You can imagine how this could happen in like a QuickBooks software where they're trying to tie the check to the invoice that is going to the same billable item and be able to kind of give you a pop-up to tell you that you have a billable item to help you with your billing process. But again, the point is that you would like to do that with items, which adds a level of complexity to allow you to then tie them out and also charge the sales account as opposed to reversing out an expense account. So that's the key to kind of keep in mind if you kind of take this concept and then apply it to accounting software, where we have accounting software courses, so you could see that, and you could see where that added level of complexity is if you want to get into that. So we're going to then indent this here, and so this is going to be for then the 200. So we would pull this in for the 200 for the receivable, and then the sales revenue. So if I post this, then we'd have the accounts receivable up top, F2 plus F2. That's going up by the 200. And then down here, instead of us negating this 200, it should be going into the service revenue, F2 plus F2, increasing the revenue that then nets out against itself down here. And again, you could also imagine a situation, and software could easily set it up so that you can add, a markup for each of the items depending on how you want to mark up for your profit margin. So this is the impact on the net income. Then on down below, we now also need to post this to the general ledger. So let's do this one first. I'm going to highlight these as we go. So let's make this one green. This one has the office supplies down here. So office supplies way down here. Let's find that on the GL. Assets, liabilities, equity, and then income and expense. We're looking for the office supplies, which is over here in CC18. This is on 130 that this happened. So on CD18 equals left to the wall. Scrolling up, we want to pick up the office supplies here. And so there we have that. That brings the supplies to 630. And we're out of balance now by the 930 till we record the other side. No, we're out of balance by 130. And then we don't match the net income by the 930. Recording the checking account now in the checking account GL. Checking account GL on 130 here. We're going to say that this equals picking up the 130. So now we're at the 8911. Back in balance up top. Let's then make this blue and record the next one, which now we have to deal with the subledger too. If you don't have that blue, it's in the more colors, standard blue, Excel is fun guy blue. And then this one, making that green. So now we've got the accounts receivable, so that we'll post that here. That's the second account on the trial balance, or it's the third account on the GL as well. 130, we're in cell AX15 equals left to the wall, picking up the 930 in accounts receivable, increasing it to the 14,487, putting us out of balance up top until we record the second half to the service revenue. So that's going to be, the service revenue is down here, second income statement account. Same order in the general ledger. Assets, liabilities, equity, service revenue is over here in BY. So 130 BZ, we're in BZ19 equals left all the way to the wall. Scrolling up to the service revenue on the 800, bringing the revenue up to the 6780. Going all the way back to the left again. Now we need to record the decrease in the office supplies. This is the weird one. That's not, in my opinion, exactly what we typically will want, but what you might often see if you use the billable items in, say, software. Decrease to the expense account in CD19. Again, not something that you typically see, a decrease to the expense account, but you could call it like a reimbursement in that sense. So now it went up and then it went back down to the 500 for the reimbursement type of account. That should put us back in balance up top. I'm going to make this blue again, right click and making that blue. No, not the lettering. It's not what I wanted to do. Let's do it this way. We're going to make that blue. Now we're on this one, office supplies, making that one green this time. So now we're on the office supplies again, increasing the office supplies. And I also need to deal with the accounts receivable, so I'll deal with that after. So office supplies down here, so we got to increase that. So we're going to go all the way to the right until we get to the office supplies again. We're in cell CC20. This is 130 in cell CD20 equals left all the way till we get to the wall again. We're looking at that $200 up top, taking it from 500 up by 200 to 700. Then other side going to the checking account. Checking account is right here where all the action is. We're on 130 on the checking account. Last cell with this like perfect length of the checking account. Pick up everything we need to do here. 200, bringing it to the 88811. That should match what's on the trial balance now. That puts us back in balance. Then one more, and then we got to deal with the subledgers for the accounts receivable. So let's make this blue again. This one I won't make green because it's the last one. That's what we are recording. The accounts receivable again. Up top, going to the third account in the GL. This is going to be on 130. We're in cell AX16 equals left to the wall, picking up then the 200, taking that to 14,687. That should match what's on the trial balance. We're out of balance on the GL. Then we're going to record the service revenue, second income statement account on the trial balance. Same for the general ledger, assets, liabilities, equity, income statement, service revenue, down in BY20, 130, the date. We're on BZ20 equals left to the wall again, picking up the service revenue of the 2,000 or 200. So now we're at the 6780 up by 200 to the 6980. That 6980 should match what's on the trial balance. It does. Now we need to think about the subledger for this accounts receivable and this accounts receivable here that we recorded. So those two, we got to pick up the proper accounts related to them. So let's go all the way to the right to the subledge. The subledge is sublime. So then we're going to go on over here, and then I think if we go on over to our timesheet, we charged that one amount on the timesheet was going to way over here, get Smith Guitars. So Smith Guitars, that's one client that we charged for that first one, I think. So Smith Guitars is right here. That happened on 130. We're on CS6. So we're gonna say in CT6 equals left all the way to hit the wall for the 930. And then the added 200, we're going to say that that's going to go to the Jones Guitars again down here on 130. We're in cell CP20 equals left to the wall. And we'll pick up that 200. So there's the 200. So there they owe us 5599. So then if I go up top to all of our customers that now owe us money, these 6 customers owe us 14,687. That should tie out to the trial balance given by the green 0. Let's double check it. 14,687 on the trusty trial balance. Is that there? It is. Let's make these back to the standard blue. And I think we've got everything that we need. This is where we ended up at this point in time. This is where we currently stand.